Welcome friends, in this video, we will look at whether XPR breakthrough is coming. Don't forget to subscribe and like, and please watch to the end to understand. Looking at the chart, when we plot a downtrend from the top on the price action, a strong trend line with quite a lot of touch points appears. These types of trends are extremely critical in determining the overall direction of the market, helping us to understand how price is moving within that trend. Especially considering that the price is currently touching this falling trend line, the reaction at this point is crucial for the direction of the market in the short to medium term. Usually, such downtrends indicate that the price remains under downward pressure. However, if the price touches this trend line repeatedly, it may indicate that the seller's strength may be waning. If the price holds here strongly and buyers step in, an upside breakout of this trend is likely. Especially if a volume-supported breakout occurs, it becomes quite likely that the price will accelerate upwards and step into a new uptrend. In terms of technical analysis, downtrends are critical reference points for traders, because reactions from these areas have the potential to change the direction of the market. The fact that the price is currently touching the trend line raises the possibility of a breakout. If the price initiates a strong upside move here, the current downtrend could end, and buyers could take control. In such a scenario, we can expect the price to reach new highs in a short time. On the other hand, downtrends often work as strong resistance zones. However, if the price keeps touching this trend line, it may indicate that it is weakening. If the price holds here and a strong wave of buying starts, a break of the trend may be inevitable, and it would be good for confidence if it makes a retest. When we examine the chart in detail, we can observe that the price movements are moving in a certain compression and a clear pattern has formed here. The structure that the price is currently in is a classic descending wedge pattern. This pattern usually indicates that the price is trapped in an increasingly narrowing band and will break out of this squeeze at a certain point. In technical analysis, descending wedge patterns are considered to be bullish, not bearish, contrary to popular belief. Therefore, it is of great importance to closely monitor the movement of the price within this pattern and its breakout potential. Although descending wedge patterns are usually seen within a downtrend, the most important feature of this structure is that it signals a trend reversal. In other words, if the price gathers strength and breaks a certain resistance level, it is quite possible that a strong bullish move could begin. Especially when we consider that the price is about to exit this wedge upwards, we can witness a serious bullish movement if this pattern works as expected. Descending wedges indicate that bearish pressure is gradually fading and buyers are gaining strength. Therefore, if the price breaks out of this pattern, it could mean the start of a new uptrend. Currently, the price is quite close to the upper line of the wedge structure and is preparing to break out. If this breakout is supported by strong buying volume, the price is likely to accelerate its uptrend. Usually, after the breakout of such patterns, the price enters a rapid uptrend and attracts investors' attention. When it breaks this pattern, it will attract more people's attention and further buying may accelerate, which will accelerate the price increase. When analyzing the movements of the market according to the Elliott wave theory, we see that the first and second waves have been completed. Now the conditions for the formation of the third wave are maturing. In terms of technical analysis, the third wave is known as the strongest and longest wave. Famous for being the wave in which traders make the most gains, the third wave is a critical phase in which the market gains momentum and experiences big rises. If the previous waves developed according to the rules, this wave is expected to extend to at least the 1,618 Fibonacci level. However, depending on the overall strength of the market, this level may be exceeded and the price may go even higher. When we look at the previous waves, we see that the first wave ended with a strong rise and the second wave was a correction. The second wave is usually a phase in the market where investors hesitate, some investors take profits, and new buyers start to enter the market. Therefore, once the second wave is completed, the groundwork is laid for the third wave. The patterns we have seen so far and the overall structure of the market suggest that the third wave may start with a strong move. Once this wave starts, investor interest may increase, volumes may rise, and the market may gain upward momentum by attracting more buyers. The third wave is known as the phase where traders can make the most profits because the price rises quickly and strongly during this period. Especially with the increase in volumes, the market can gain momentum and the price can reach the 1,618 Fibonacci level. However, an important point here is that the third wave often doesn't just stop at 1,618 and can continue to higher levels. Especially with positive developments in the market, increased investor interest, and the uptrend gaining strength. It is possible to see the price extend to the green line, or even the blue line Fibonacci levels. This means that the maximum level that the price could see in the third wave may not be limited to 1,618 and could turn into a bigger bullish move. Moreover, technical analysis indicators are also giving important signals to support the third wave. First, the current position of the price is creating a strong bullish base. Secondly, when we look at the volume movements during the previous waves, we can see that a strong wave of buying is starting to form in the market. In the third wave, volumes usually reach their highest levels, and the market strengthens its upward movement. If the price starts the third wave, the market's upward movement could accelerate and we could see a much bigger uptrend. At this point, the most important thing for traders to do is to carefully follow the price action and watch for the technical signals to start the third wave. If the price makes a breakout to the upside and the volumes increase, this could be a strong signal that the third wave has started, and it would be very normal to start this third wave once the downtrend is broken. When we carefully examine the RSI indicator, we see a prominent downtrend here that has been going on for a long time and has been suppressing price action. The RSI is currently close to this trend line, and how it reacts from here is critical. The RSI is a very important indicator when it comes to predicting price action, and trend breakouts often lead price action. Therefore, an upside breakout of the RSI's falling trend line could signal that the price may soon make a similar breakout. The current situation suggests that a change in momentum may occur in the market, as the RSI rests against the trend line. There is a strong struggle between buyers and sellers in the market, and if buyers gain the upper hand, the RSI is likely to break the trend line to the upside. If the RSI breaks the trend line to the upside, it usually indicates that the market is increasing buying pressure, and the price will similarly move upwards. At this point, when we look at past price movements, we have often witnessed that when the RSI breaks upwards at such critical levels, the price also breaks upwards in a similar way. So when the RSI breaks the falling trend line upwards, it can be a very strong bullish signal for the price. In terms of investor psychology, this is also very important because a breakout of the RSI can boost confidence in the market and bring new buyers into the market. If the RSI breaks the trend to the upside and manages to stay above it, this could lead to a stronger bullish move. However, it is also quite possible that after this breakout, the price will test the falling trend line and continue upwards. So the RSI should break this falling trend so that the price breaks and rises. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.